Welcome to my YouTube channel. I'm Witty and I'm a Forex trader. I also do teach traders how to remain consistently profitable trading Forex. In the month of August, I held a free training on the Prop Firm Academy strategy, and we got a lot of testimonies from that free training, and I decided to put up that same training structure on YouTube. So if you're interested in the more detailed version of this course, you can simply visit www.thepropfirmacademy.com and choose a package. Also, feel free to join my Telegram community where I do share trade ideas, weekly forecast, and I also host the Path to Profits podcast every Monday by 7 p.m. GMT +1. So go ahead, join my Telegram community for free. The Telegram link is just in the description box. Subscribe to my YouTube channel, like and share this video. So today we're talking about market structure. This will be the part 1 or the very first video in this smart money concept series, and there are going to be a total of about 8 to 9 videos which I'll be releasing every week. So for the next few weeks, I'm going to be taking you through smart money concepts, which is actually a very good way to trade and to analyze the market. One interesting thing is trading this way ensures high win ratio and as well as high risk to reward on your trades. So that being said, let's delve in. Basically, there are 3 types of trends in the market. There's the uptrend, which is basically price moving up and making higher highs and higher lows. And there's the downtrend, which is price moving down and creating lower lows and lower highs. And also you have the ranging market. And in a ranging market, price is neither making higher highs or higher lows. You can't really determine what the trend is. So in a ranging market, you don't know if the price is moving up or if the price is moving down. In an uptrend, you can clearly understand and see the price is moving up. In a downtrend, it's quite vivid and quite obvious the price is moving down. So basically, this is how an uptrend moves. You can see price making higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, till a previous higher low is broken, and then trend could likely change. So basically, I do say Forex is more of an art than a science, because it's basically what you can see. In this case, we can clearly see from this point up to this point, price was clearly just moving up. So this is how a typical uptrend moves. So price moves up, it does a little bit of retracement, creates a higher low, and then makes another higher high which was higher than the previous high, and another higher low formed by a retracement, and then a higher high. So the higher high is basically higher than this high, and then the higher low is basically higher than this low. So that's why it's called higher low. So you can look at it also as higher high, higher low, higher than this high, higher than this low, higher than previous high, higher than previous low, and the like. So that is basically how an uptrend is formed. And if you're looking at it on the chart, it basically looks like this. You have the candles typically making higher high, higher low, higher high, higher low, higher high, higher low. So on the live market, you actually would not see the straight lines, but you see the candles. But actually, it's more or less the same concept: price making higher highs and higher lows. And then you have retracement. So the market does not take the elevator. Markets will always take the stairs. That is why you have retracements, and those retracements are basically bearish trends, or rather downtrends within an overall uptrend. So for a downtrend, likewise, from this point to this point, it's obvious that price is actually just coming down. And for price to just come down, it would not just come down like an elevator. Likewise, it has to take the stairs, which then creates a lower low, lower high, and then a lower than previous low, and then a lower than previous high also. So that is basically the idea: lower low, lower high, lower low, until this is broken, and then trend changes. So the process whereby in a downtrend price makes upward retracements is basically called a retracement. And when price continues going the overall direction, you call it a trend. But in a downtrend, when price is going up, we call it a retracement, except when that retracement now decides to go all the way and completely change the trend, which is the concept we are going to cover in the next video. So likewise on the chart, this is also how it looks. You have the candles making lower lows, lower highs. So the markets will not just come straight down like you have it here. After this kind of movement, there also has to be a retracement to create lower high and then another lower low. So markets will make lower low, give a retracement to create a lower high, continue the trend, create another lower than previous low, give a retracement upwards to create a lower than previous high, give another lower low, another lower high with a retracement, continue the trend with a lower low, and like that, and that is basically how a typical market moves. So let's get on the live market chart and see exactly how this all play out. So for instance, this is the Euro USD chart. We can see clearly from this point up to this point, Euro USD just kept on trending down, and this is the daily time frame. However, what you can notice is at this point right here, market was more or less ranging. So one thing you need to understand is after a range, you should expect a breakout, and a breakout can also be called an expansion phase. So basically, this is a range. In this range, price is neither going down nor going up. It's neither going down nor going up until we have this happen. And what you realize is after price then broke out of this range, it created a low and then came straight right back to the high of this range. So even this can be likened to another even bigger range until market eventually broke this and started trending downward. So you have this as a very clear downtrend. And if we're then going to go ahead and name this, then we could name this a lower high. This becomes a lower low, a lower high, a lower low, a lower high, a lower low, and this could have signified trend change. However, the trend did not change and price created a lower low, lower high, lower low, lower high, lower low, lower high, and now we're expecting another lower low for the trend to continue. So this is basically how a trend works, or how the downtrend basically looks. But one other thing you need to understand is there's also what we call complex structure. So in a complex structure, something like this, what we have right here, you can see it looks like price is making higher highs, but actually it's overall in a downtrend. Something like this also, it looks like price is going higher. At this point, it looks like price has broken this, is going higher. This is a very complex structure at this point. Price broke previous lower high, but the trend still continued. So in times when it doesn't look clear, or when you don't really understand the market's direction, what I advise is it's best to stand down. And another thing we need to understand is market is fractal. But before we look at the concept of that, let's look at Euro GBP. So Euro GBP is a typical example of an uptrend. We realize from this point up to this point, price kept on going higher. So this becomes higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and then higher high. So typically that is how a uptrend looks also. So even in an uptrend, you know clearly price is going up, but price still has to make those downtrend retracements. And referring back to Euro USD, one thing I need you to understand is this concept works on any time frame at all. You can try it out on any time frame you like. One other thing is market is fractal. Fractal means whatever happens on the weekly time frame, the same thing will happen on the daily time frame. The same thing can also happen on the 4 hour, the 1 hour, down to the 1 minute, and even the 10-second time frame. And you also need to understand when you're looking at a higher time frame, you would have lesser market trends compared to when you're looking at a lower time frame. So for instance, Euro USD, let's pick these parts to look at. So we realize overall market was in a downtrend, but if we then go on the 4-hour time frame, on the 4-hour time frame, what you realize is market was actually in an uptrend on the 4-hour time frame. So this was lower low, or that was higher low, higher high, higher low, higher high, higher low, and then higher high. So what you have on the daily time frame was an overall downtrend, but on the 4-hour time frame, it was looking like an uptrend. And if we even go even down to the 1-hour time frame, you would even see more trends. So this is that same chart from the daily. We had the 4-hour uptrend, and if we look at it on even the 1 hour, we realize this was a mini uptrend. Likewise, price was making higher lows, higher high, higher low, higher high, higher low, higher high, higher low, and then a higher high. And afterwards, price began making a downtrend, which made this lower high, lower low, lower high, lower low, lower high, lower low, and then it's changed. And at that point, we started seeing another uptrend, which was lower, higher low, higher high, higher low, higher high, higher low, and then a higher high, higher low, and another higher high, and another downtrend again, lower low, lower high, lower low, lower high. And within all of that, we'll add a little period of a ranging market, which was right here, where price was neither making higher highs or higher lows. And after that, we had an uptrend and then a downtrend. So if you even go on the 15 minutes time frame, you would even see more trends. So basically, what you can do is to play around with this, focus on a particular time frame to understand market structure for yourself. So one thing I've come to realize in trading Forex, I've been trading for about 4 years now. I've come to realize the basics in Forex are actually what you need the most to make money. And one thing is, in almost all Forex books that you might come across, you come across this concept of higher highs, higher lows. But so many traders tend to ignore this simple concept. But in reality, understanding this concept, you don't even need any indicator to understand the charts, to trade the charts, and to actually make consistent profits. So what you need to understand is basically an uptrend is characterized by higher highs, higher lows, higher highs, higher lows. And within all of this, you could have periods of a ranging market. You could have periods of a ranging market. And many of the times, the market would range just before a breakout or before an expansion period. Before you can see this high move, market will usually create a little bit of a range. Before price will eventually drop, you saw this little bit of a range. So whenever you see a range in the market, it's usually an indication that a trend is going to commence soon. So the range is usually the period whereby liquidity is formed, liquidity is acquired, whereby positions are acquired before the market then goes ahead to expand further. So go ahead, practice market structure. Feel free to join my Telegram community and ask questions if you have any. Also check out the www.thePropFirm Academy. Choose a package so you can learn more about this concept, as well as get free trade ideas and free trade signals. And make sure to subscribe to my channel, join my free Telegram community, and I'll see you in the part 2 of the Smart Money course of the PropFirm Academy. In the part 2, we're going to be talking about break of structure, so you understand how to identify when the trend has changed, what exactly to look out for, and how basically to adopt it. So in this video, you should have learned how to basically identify what the market is doing, that is the current market trend. Is price on an uptrend or is price on a downtrend? So thank you so much. See you in the next video.